All right. Hello, everybody. Welcome back to another episode of the Tech Bros Weekly. You know, Roy, you want to tell everybody why it's at 9:31?
Tell the truth, Roy.
One of us was late, and it wasn't myself, and it wasn't Tanner. Could be anybody.
Could be anybody.
Dude, you just threw me under the bus completely.
He didn't say your name.
Could be anybody.
My back. Nope. He showed who he's loyal to today. There you go, Tanner. Yeah, I was 30 seconds late, but I'm here. So
Roy's loyal to the truth. That's who he was loyal to.
And I was in Tanner's chat teasing him as well, but I ended up being the late one. So
I had no idea what time it was.
So well, we got a lot to talk about today. First of all, how are you guys? How are you doing?
It's good to be back. Missed you guys.
Good to be back. Yeah.
Yeah, we've had a lot happen over the past week. Lots of different tech stories. The main things to talk about tonight are the Robinhood July metrics. Someone who is now shorting Palantir, a little bit of a high-profile short. We'll talk about that. Chamath is back in the SPAC universe. That was breaking news after the bell today. Did not expect that. Actually, very, very upset about it, but nonetheless, we'll analyze that. And then we got some comments from Sam Altman on AI, OpenAI, NVIDIA. So we'll get into all that good stuff as well, and we'll get into it.
Yeah.
All right. Thank you, everybody, for being here. Let's start off with this July metrics on Hoodie. Robinhood closed today at around 114, 160,000 funded accounts, 300 billion in AUC, 6.4 billion in net deposits, 33.6 billion in cash sweep. Options was 196 million contracts. For context, last quarter they did 515 million. So you got almost 40% of the contracts in 1 month traded for 1 quarter. Equity all-time high 209 billion. Crypto 6-month high 16.8 billion, and margin book all-time high 11.4 billion. Roy, I will take it to you. What did you think of these July metrics?
I mean, it's a really good month. So we had a hunch that it would be. It's always nice to see the numbers. Of course, equities, options are all looking good. Crypto as well. Margin was kind of a standout number, and they like if you look at it, it spiked up. And the nice thing about margin is it's not, you know, if there's a terrible month over this next month in August that we end poorly, you know, that book will be compressed some. But this isn't just revenue that goes away instantly. Instead, usually that margin book goes up over time unless we have a massive pullback and some people get consolidated as a result. So I loved seeing that. Now, the other piece that wasn't shown on this dashboard, but was shown in the metrics, was the securities lending. And that is something that they talked about in Q2. They mentioned, and I'm glad an analyst asked the question because I wasn't able to because we couldn't figure out the phone system. It's on us again. If basically that big spike from securities lending, which they saw in Q2, which delivered that beat largely, was something that we could continue to see going on. And they said pretty much yes. And then we see more of that here in July as well. So I loved seeing that. That's actually really huge. Used to be a very meaningful part of Robinhood's revenue. So yeah, right there. Total securities lending revenue was 61 million in July.
It's up 190% year over year, dude. They are just crushing it on every level. Tanner, what was your takeaway from these July metrics?
Yeah, same thing that was interesting about the securities lending. It like we saw a correlation or some sort of pattern that Q2 was really strong. So I wasn't really worried as much in Q2, but seeing it continue into Q3 is breaking trend, and it's breaking trend in a very good way. So that was exciting to see. I ended up, if we want to look at sort of how I'm looking at Q3 expectations, but essentially, like, it's looking very positive. I think that monetization on crypto continues to climb up. If August is anything like what we're seeing in July, which overall crypto volumes looks, you know, strong still, that could be very, very exciting. The equity notional volumes were just absolutely insane, off the charts. So if that continues into August, which it very well could, and then September's another story. But if it can continue through, this will be an all-around breaking quarter. So right now, like last quarter, we did about 988 million. Right now, I'm looking at somewhere along the lines of 100 or 1.17 billion.
You want to share your sheet, your Excel sheet?
I can, yeah.
While you're doing that, real quick, I just want to double click on what Tanner's saying around crypto. So this user on X posted, "Not happy Robinhood wants to take so much. She was buying 80 Ethereum, and the spread, which is still way less than Coinbase, but nonetheless, people are noticing, hey, that spread is increasing, but she's still probably going to buy it on Hoodie versus Coinbase because she would be paying 6,000. 0.85%. That used to be 0.45, 0.55 a year ago. So that number is increasing, which is very good for the overall take rate that Robinhood is going after. Also, Kathy Wood did buy 123,000 shares today as well.
Well, my understanding is that whenever you're buying small amounts of crypto, Robinhood's the place to be. Whenever you're buying extremely high amounts of crypto, like you're buying $360,000 per purchase of Ethereum here, Robinhood is not quite the best place to be. But there's places to get unbelievable rates on cryptocurrency. So she's probably right, or they're probably right, that that's an expensive way to buy cryptocurrency at that level.
Yeah, they're cheaper, but it's really easy, and it's cheaper than pretty much everything else that's that simple and straightforward, which is why Steve, for instance, found it very compelling to use to buy crypto. So if Steve's buying it, I'm sure he talked about it last week. I didn't actually see that episode. I should have, guys. Then that's meaningful.
You didn't listen to the episode, bro?
I did not. No.
Why?
Mostly hanging out with my daughter. So
you left us alone? No, it's okay.
Extremely sad and depressing. I'm not happy to hear that, but whatever. He's got a family.
Well, so whenever Tanner has a video, like the place to watch it is usually like in a sauna or in a pool or something, some body of water. And the body of water that we were next to was alligator infested. So we didn't do that.
The place to listen to my videos is in a body of water?
Yes, of course.
I mean, let me tell you, my body becomes a body of water when I'm listening to Tanner. So that's a whole.
I don't know what that means, and I don't want to.
That's you know what it means. You know what it means. Tanner, share the damn sheet. We're
okay, bro. Sorry. You guys were being super weird, and so I was waiting it out.
Okay, tell us how much money we're gonna make when Hood goes to 150.
Let's talk money. So, essentially, now you have to break it out. There's Bitstamp crypto volume now that's separated from Robinhood app crypto. I am not factoring in Bitstamp crypto volume at all. I put $0 associated with Bitstamp. Okay, so which is not going to be the case. There's going to be some. Okay. That being said, we're looking at July numbers, and so I have to tell you guys a pretty serious formula. Keep this in your head. This is going to be important. Take July numbers and multiply them by 3. Okay. So there's 3 months, and that's it. That's the formula. Essentially, once we multiply them by 3, you can associate a take rate, and then that gets us revenue for each one of these revenue lines. That gets us a transactional based revenue of $708 million if we keep up this July rate. Dude. Now, if July was super hot and that's going to come down, adjust your expectations. Okay. Maybe it's 50 million lower. Maybe it's 80 million lower. You can decide that. On the next breath, I'm also putting a very conservative, I think it was 315 billion of 315 of assets under custody. I think we're at 298 right now, just on this month, or a little bit higher, I think. And that's how I get my take rate on net interest revenue, and then other revenue will be lower from Q2, but maybe not even. Like if you look from, there are usual spikes in Q2 of 2023 to Q3 of 2023, but in the last time, it actually still, it did dip a little bit. So I'm also seeing that slight dip from 93 back to 70.
That's fair. So that's 1.1 billion. Okay, so the analysts have us at 1.09 billion for Q3 right now.
Yeah. But I think it's very fair to suggest that we're going to be over $1 billion this quarter.
Mm-hmm. And it's also fair for them not to be quite as high as Tanner, because this was, a blockbuster month. So usually August and September, there's some seasonality. We'll have to see how that plays out, especially with crypto in September. But
So far, so good.
yeah, if that's not a factor, awesome.
A couple other pieces of Robinhood news. Brad Gerstner, one of the highest profile public investors who manages a fund, added. He was one of the only guys that really added heavily to Robinhood. 359,000 shares. Originally, he had 2.8 million shares in Q1. So did not see Hood pop up on a lot of 13Fs and 13Gs, but we did see it on Gerstner, which was good to see. And so you got some of that momentum there. Also, I wanted to ask you guys, just sort of like a real quick topic. Opendoor, I'm not in it. But if you looked at the options data today, the number one traded stock in the stock market in regards to derivatives was NVIDIA. The number two traded stock was Opendoor. So here's a question, and for everyone in the chat as well. Do we think a decent chunk of this volume is happening on Hood? Because if it is, I think that's another tailwind for Robinhood.
It is.
Yeah.
I mean, like, it just seems like the memesters and are really attracted to Robinhood, which is a little bit ironic given GameStop, AMC, and all that stuff. But I mean, that's not going to happen again. It's an easy to use platform. It's really simple and easy to use for new investors. And honestly, a lot of people, when they first start out, they're not serious in investing. And I don't mean they're not serious about investing, but they've not taken the time, the discipline to really figure out what investing strategy works for them. Studying the market, they're just like, hey, this stock is hot and running. My friend just doubled his money. Maybe I can too. And that's an okay place to start. And I'm sure we have some people in the audience that are like that too. But grow from there. And hopefully a lot of these folks don't get hurt or crushed. Because, I mean, there might be a huge pop-up at Opendoor. There already has been before. Maybe there's a massive squeeze. I don't think it's going to 82. But, if it does, that's pretty amazing. But then it's not going to be sustainable either. So some people have been crushed, but it's very good for Robinhood. And it just goes down to that simple ease of use and that great product that they have. And of course, having no fees up front, payment for order flow.
Yeah. Yeah. By the way, guys, in my revenue expectation, like I said, I didn't factor in any Bitstamp. Like there's still going to be a lot of those new revenue lines that I really didn't even look into. Gold member expansion there, the securities lending increasing as a percentage of total assets under custody. I'm not looking at any of that.
So you're saying all those are going to zero, obviously.
Yeah, those are going to zero, and people are just going to be using equity notional volume. But I do think there's something to say about the meme stock excitement being heavily favored to Robinhood's platform over the Schwab's and Thinkorswim and stuff like this.
I agree. And so wait, on your crypto revenues, you only you took out Bitstamp because you don't know the take rate on it, and you only did like the 11 billion for.
Yeah.
Oh wow. Oh, so that's
Yeah.
I
am completely just taking it away. So we do know some form of take rate because we know how much they made in June. So you can take out what they made in June. Yeah, something like that. Like I think they made 6 or 7 million. And
you can know for sure after this quarter reports, or at least close enough to it. There is some retail on it that has a much higher take rate than the institutional, but you'll have that full quarter of Bitstamp plus Robinhood. Just subtract the Robinhood from the monthly stuff. From the full amount, there's Bitstamp, but yeah,
got it.
And it's not it's not just about revenue, right? Like Bitstamp's also here to help with margin and bring more to the bottom line because we have our own exchange.
And with Robinhood, they usually take something when they acquire it and then they evolve it. So Bitstamp isn't going to stay Bitstamp exactly the same. It wasn't just bought to buy revenue, but it's their first institutional product. They're going to build a lot off of that. And frankly, we've already seen them launch some stuff in the crypto event in France from it.
Yeah,
we're going to have staking and all of these things. They're all brand new revenue lines. Like it's an unbelievable compounder.
And then you have the tailwind of Opendoor, which is that you don't need to own Opendoor to get exposure. Hood is exposure because I agree. We don't know the exact numbers, but I think a lot of that volume is not happening on E-Trade or Schwab or Fidelity. It's happening on Hood. And so and they're option contracts more than anything, which is just printing money for them. So it looks like August is going to be decent. September is the month that usually tends to just be awful. we're going to see if September is not too bad, or even if it's slightly bad, if August and July can carry the momentum here.
Yeah, it was an exception last year. Of course, it was an election year, so maybe that was part of the reason. But yeah, usually September is just death for crypto, and it can always be different. I'd love to see it continue on. It's good for Robinhood, good for me. I own a lot of crypto, so.
All right,
And honestly, like the staking that you mentioned, Tanner and Amit, like it's not going to be a small revenue source to sleep on. Like, it's just in 3 product lines right now, but like Ethereum has a lot of people fascinated, interested by it. Of course, it's appreciating in price, which usually means people buy it and they stake it as well. And just, do you guys stake any Ethereum or have any Ethereum?
Yep.
I can't in New Jersey because it's banned here.
That's right. Yeah, they don't trust you with gas pumps, and they don't trust you with buying Ethereum.
Oh yeah, that's funny.
Risky. So has it been? Have you staked your Ethereum, Tanner, or have you done it a while? Okay.
Yep.
Yeah. For those that haven't done it, it's a pain. It takes, I think, 9 days for it to be staked, and it's a little bit quicker if I remember correctly. It's been a while since I've sold Ethereum to unstake, but it's not instant. It takes a long time. Solana's a lot quicker. So this staking revenue is going to be somewhat persistent. It will change and ebb and flow depending on how the underlying is doing and people buying and selling and taking profits. But I don't think it's going to be nearly as lumpy as just the actual crypto exchange volumes.
Staking is going to be another form of those retirement accounts or gold accounts. It's just added stable revenue for Robinhood.
Yeah.
And if you're a believer in these SBETs or BMNRs, then you're hoping that Ethereum goes to $10,000, $15,000 per coin. If you are hoping for that, then you're going to love Robinhood, because what happens whenever you're getting stake on that? What happens whenever the transactional volume on those coins continue to climb because people's assets under custody just tripled? Like,
dude, I think we can say it. Robinhood is the best Ethereum play if you are looking to get a reasonable risk reward, meaning BMNR, SPET, they're going to dilute like crazy, but you're going to get way more leverage than Robinhood. I don't think Vlad's going to dump billions of dollars of shares on us. In fact, they're buying back shares. And BMNR and SPET aren't real businesses. That's okay. But Robinhood's a real business. Staking is going to be relatively consistent. If Ethereum goes to 15,000, most of the buy, or I shouldn't say most, but a lot of the buying will be happening on Hood. And if they can keep increasing market share from Coinbase, then that's going to accelerate. And the transaction volumes, the staking volumes, the AUC just goes up. And so the market will respond accordingly if that happens on Hood, and you get to own a real business. So to me, it's like, I just think it's one of the best ETH plays that's out there.
It's a good one for sure. I remember back in 2023, you were talking about this too, that, some people were fascinated into and still are in crypto miners, and others, were like, hey, if you want a proxy bet on crypto, Robinhood makes a lot of sense. And it's a lot more than a proxy bet on crypto, but boy, has that played out very well.
Agreed. Last thing on Hood, and then we'll move on. So what do you guys think about this? Vlad and Johan are doing a AMA on Robinhood's Reddit or subreddit on Thursday about crypto. Roy, any thoughts on this?
Yeah, when I saw that, I clicked on the link and I looked at some of the questions, and it's kind of there's some good questions on there, but there was some like run-of-the-mill type of
dividend
spam type questions that you get on X or even on like Say Technologies when people are asking about a dividend, just unrelated stuff. But I think it's great just having that access, as retail investors, or even in this case, it doesn't have to be investors, just people curious about crypto asking a question. AMAs, there's, at least when I was looking there, it looked like a lot of questions. So I think they might pick, like 50 of them and deal with them. But I love it. I absolutely love it as an investor. I love it as, a retail guy as well. And it's great that these guys have exposure to like real questions that people have that are in retail.
Did you see Vlad on Cheeky Pint?
Oh, I listened to the whole thing. He was great.
It was awesome.
So good.
It was a perfect podcast. And that was with John Collison, one of the co-founders, the Stripe brothers. And you watched in real time as Vlad pitched John on tokenizing Stripe. Now, that's a hard one to sell. I mean, the entire institutional market or like institutional banks have tried to pitch Stripe on going public for, the past decade. So he's been getting it his whole life. Vlad made another attempt. I don't think it's going anywhere, but still unbelievable podcast. At one point we saw Vlad do handstand push-ups, which was interesting as well. Upside down doing push-ups during a podcast. But our CEO's ripped.
Do you real quick, or Roy, you want to share something here?
Related to the IPO thing. So if
Okay.
you want to comment first, so this is like a sort of a pivot to the Chamath thing, but also there's some interesting overlap between what Chamath sees with IPOs and also Vlad sees, although a very different approach on how to deal with it. So I wanted to talk about that a little bit.
Okay, so let me ask a question real quick before we transition to that, because that'll be a whole different topic. Roy, you didn't watch the podcast yet, right?
No.
Okay, so Tanner did. So Tanner, so for for everyone to just give you a synopsis of the pitch on tokenization, Vlad said, "Hey, let me tokenize your stock, get it to retail investors." And Stripe's CEO said, "Well, retail investors already have exposure because pension funds invest in venture capital funds, and venture capital funds invest in Stripe. So when we go public, the distributions from the IPO to the LPs to then the pension funds is how teachers in like Minnesota get a return on their investment."
Well, not
Tanner,
just go public, just the tender offers on their private
correct.
shares.
Do you think that was a legit answer, or do you think that was missing Vlad's entire point?
I don't think it was missing. I think that he just said he just lacks the sympathy for the individual retail investor because the people that they're selling to are also individual investors as well.
No,
I
so
just don't think.
do you think there's a point? Do you think that like Teachers Pension Fund of California getting access to Stripe via a VC fund is the same thing that Vlad's talking about with you and I getting access to Stripe?
No, but I mean, it is kind of true that if you are a capital light business and you don't need to raise, why would you raise? Like, if Stripe is comfortable doing what they're doing, then fine. But I do think it's unfair for their employees, but they also don't want to be, I don't know, maybe they don't want to be valued like a changing valuation for every single customer win and customer loss that they have. Like maybe they like the fact that they get to decide whenever they want their company to be valued. I don't know if you guys see, but companies usually IPO when things are going well.
The reason I ask is because this is legit, not a bear case, but a legit critique of what Robinhood's doing with tokenization. And, we're all excited about it, but if you don't get Stripe to agree to this shit, people can't trade Stripe, right? I mean, maybe eventually in the future, Robinhood just bypasses it. But like the point is, you kind of need the Anderls of the world, the Discords of the world to be on board with this stuff. And if they're not, you're left with like F quality startups. And who wants to trade the tokenized versions of those? So
well, I don't think, I think we still get some of the best acts, and this transitions us again. So we don't have to go off of this, but there are capital intensive businesses that are some of the best IPOs or best private companies in the world as well. I mean, SpaceX might end up doing this. Maybe a OpenAI, for example. These companies do still need to raise, like they're capital hungry. Stripe is just in a very unique position.
Yeah.
So they just happen to be one of the largest that are in that unique position.
Yeah, I think the issue, there's several issues, but one of those is, for the most part, there's exceptions. But if you're a company that's doing just fine without the need to raise capital, there's usually probably going to be more drawbacks to being a public company versus private. Private, you can almost do what you want. I mean, there are laws, there is regulation. For publicly traded companies, there is a whole lot, and things have to be done in a certain way on a quarterly basis. It all has to be very regular, high degree of accountability and transparency as well. And
yeah, but if you're B2B, then you want do you want to deal with this unknown company like Synapse, for example, where you have that whole fallout with that bank or with that banking partner, or do you want one that's constantly publicly audited and that they're in a financially good situation?
Yeah, I think that there'd be a preference towards B2B being public versus B2C. Like consumers usually don't think in those terms at all. There's very few that do. So
yeah,
it's a good point.
Okay, so that that transitions us into.
That was good. A+.
Thank you. I appreciate it. That takes us to, let's just get rid of the big words. The big words are the hard words. Well, the small words are also hard words too, but it is what it is. Chamath is launching a new SPAC. That didn't sound good the way I said it. What is going on? I said something last night with Steve too, which if you guys were on the Future Show, then you probably heard it. But Chamath is launching a new SPAC. The company is worth 250 million, 25 million shares at 10 per share. It's called American Exceptionalism Acquisition Corp. The funniest thing in this is that he put a disclosure out that says, we believe that this investment is most suitable for institutional investors, and retail investors should approach with caution, if at all. If they do lose their entire capital, they will embody the adage from President Trump that there can be no crying in the casino.
Yeah, I saw that. That's just ridiculous.
That is a literal thing in the filing. So, Roy, I'll take it to you. What are we supposed to assume now that Chamath is coming back?
Well, we have a whole bevy of new investors, and I think that I'm talking to the three of us right here, and if anyone else is listening too, I wouldn't say like necessary duty or obligation. I think that's a wrong word, but I am personally going to take this route, and I would highly encourage you guys to at least bring awareness to this. Now, could the SPAC work out well? Yes. There are a couple of cases like SoFi. Ironically, actually, some of his best SPACs were ones that ended up not going public, and so it just returned the $10 to shareholders. So it's never a great thing, but SoFi is one of the examples that actually it worked out well. There are other companies that have SPACed successfully, become real legitimate companies as well. So this isn't always a warning sign. It's not even necessarily a top signal in the market. And Chamath, he does have a point here. I don't like the answer or a solution to this, but he mentions this in the founder letter. This is in the SEC filings as well. And the casino thing is right there, by the way. So it's hilarious. But he said in 2017, when he first started SPACing, there were 150 private U.S. tech companies that were unicorns. That's $1 billion in valuation or higher. And he said, well, a lot of these are not going public because inefficient pricing mechanisms. And we've seen this, like legitimately, we've seen this time and time again. Bullish was the most recent example. Figma very recently. We've seen this with Newsmax. We've seen this with almost everything. Not current though. We believe that the status quo is a process to deliver a one-day pop and high levels of oversubscription to an underwriting bank's best customers, rather than creating a mechanism for efficient and market-driven price discovery. And I think Vlad would probably agree with all or most, if not all of that. He's talked about some of that before as well. I think even Alex Karp, they went the DPO method in Palantir just because they did not want to be part of this model. They saw it as broken, and obviously a lot of companies did. Misaligned incentives as well, the one-day pop, sell quick versus actually have an attachment to the company, long-term impact as well. And then he said, it's gotten worse. There are now 700 private companies in the United States with $1 billion or greater, 5 times increase in only 8 years. And there's 5,000 public companies in the United States relative to 7,000 through the 90s. Some of those have gone out of business. There's been consolidation as well. And so they're legitimately, as he goes in here, well, he doesn't go too much further on this. There is an absolute problem as it relates to the amount of private companies versus public companies, the size of some of them. It's not that it should be illegal to be private or anything like that, but there's a reason why these companies are not going public. And so Chamath's solution is, hey, let's SPAC them. Let's circumvent the traditional IPO process through a special acquisition company that's a shell company, a shell corporation. And the difficulty is when you do that, you bypass a whole lot of the, in some cases, maybe a little bit too much, but in some cases, very legitimate checks and balances as you go through. There's a lot of legal scrutiny on companies that go IPO versus those that go the spec route and are just acquired. And then, of course, Vlad's take instead is rather than do this, which has, I think, a lot of risk. And we've seen this with Chamath, like SPAC just, these days, I know it's not a scam, but I just see scam when I see those 4 letters. And my brain, it's not dyslexia. We got to figure out a new term for it.
But the other reason you associate it with scam is because Open Door, Virgin Galactic, Clover Health, they're all down over 50%. Virgin Galactic's down 98%. He was the guy, let's not sugarcoat it, that was on the media networks convincing people these were phenomenal companies to buy into. And then he dumped before the 2022, like he dumped 85% of his SoFi before SoFi fell to $4. That is what makes this so pernicious.
Yeah, he's not a scam artist per se, and he sees the problem correctly. I just think that there's so much more risk with this model of mass SPACing a lot of companies versus Vlad's model, which has been pushed back on too. Just let's tokenize the private equity and give shareholders access to that. I think that's a lot more attractive than this Chamath model. And DPOs are hard, so probably a lot of companies wouldn't succeed like Palantir did through DPO. So I don't think that's a great solution either. I think Vlad's solution is probably the best. Regulation probably needs to ease up a little bit, but Chamath's backing more like, oh. So I'm going to be pounding the table a lot through videos and posts. Like, not saying don't buy, you know, it might be a great company, but as a reminder, like, this is not a real company right now. They will look to identify companies, and there are certain, he talks about the areas that they're focused on: AI, decentralized finance, and defense. There's a couple others that were mentioned throughout the letter as well. They probably have some targets in mind, but we don't know what those are initially. Now, I read through this, didn't spend more than like 45 minutes. So the way it used to work is once they actually made the acquisition, if you weren't happy with that, if you wanted to back out, you get your $10 per share back, plus whatever treasury interest there is. I think that incentive is the same here, but it's worded a little bit differently. So yeah, I'm not sure. But I just don't like the model.
Tanner, are we topping because of this?
Let
me do a poll in the chat as well. I'm gonna do a poll in my chat. Do you think we're topping because of this?
What I will say is I don't actually know how different this is from what Robinhood does. I mean, I think the real difference is that Chamath holds a share of the business himself, and he's dumping it whenever he wants. But the individual companies that he's bringing to market, I mean, I don't know. They were pretty hot venture names as well. Clover Health, SoFi. These were all unbelievably oversubscribed business, like Virgin Galactic, you know. So bringing it to a new audience, I think is perfectly fine, and I think that's what Chamath did, and that what Vlad will also do. I think the part where what makes it scummy is the fact that Chamath also takes a share in the business and then dumps it whenever he feels like he wants to. Vlad will take companies public that do not have the same level of he's not taking them public, but he's allowing retail and non-accredited investors to bet on companies that do not have the auditing that you need to allow retail investors to purchase you in, which is kind of like a SPAC. And you know, they just hopefully don't take a share. And I don't know if they do. Maybe they also do. Maybe Robinhood takes equity stake in those companies.
I think to Chamath's credit, as I was reading through the filing, there is a new clause that, like, unless the stock goes up at least 50%, he's not allowed to sell. So there is some nuance that's way different from 2021, where he could dump whenever, which is a good thing. The other thing is, I'll give my opinion. I don't think we're topping because of this, but it's getting hard to defend some of this shit. Like, I've been defending the ETH treasuries, the Bitcoin treasuries, some of these frothy valuations. But when you see stuff like this, it makes you think, unless Chamath genuinely has a good company that he can redeem himself with by taking to the public markets, this guy does not care about retail investors. He does not care about the little guy. He does not care about democratizing access. He, quite frankly, does not care about what he did in 2021. I've never seen an apology from him publicly. I've seen a defense of his behaviors, but not an actual, hey, I'm sorry that random people saw me on CNBC and bought stocks that I said potentially would go to the moon. Now, obviously, everyone has to be accountable for themselves, but at the end of the day, like, if we're being real here, if they only bought them because of you, then you bear some responsibility. I don't know how you sleep at night without even giving an apology.
No, but bro, I understand what you're saying, but if Robinhood ends up tokenizing a stock that no one has heard of, well, not no one has heard of, but that you haven't been able to purchase actively previously, and then that stock ends up falling a ton, you don't think Robinhood takes heat from that?
No, it's fundamentally different. If Robinhood on your Robinhood app pops up a new IPO or a new tokenized startup that you can invest in, Vlad's not out there on CNBC pumping to millions of people, hey, this is a great company to buy into.
Yeah.
It's just there. You can scroll past it. Chamath purposely, I mean, this dude created, like, it was like he was releasing singles from an album. IPOA, IPOB, IPO. Like, he led this entire marketing campaign. And
yeah, I guess the marketing is the fault, but the actual like bringing more companies public, I want like we're now at like a not historical, but we're at a very low amount of public companies. Like
I don't disagree
historically,
with
there's
that.
been like 10,000 companies. We're at like 4,000 right now.
Yeah, no, I want more public companies, but the way in which they come public matters, right?
Yeah.
And so my point is, I hate everything about this, but I don't think it's a top. But it is hard to defend because Chamath has been a very hard character to defend in the public markets. And so I don't know how this plays out, but I don't think it's the top in the entire market.
Yeah, here's the IPOs so far. So we will beat 2024. And assuming we continue to be in a bull market, we're going to see a lot more in 2026 as well. We're still really
definitely
far off.
very different from 2020 and 2021.
Yeah, we're more in a normalized bear market, not bear market, bull market versus what's happening here. But this is still lower than you would expect. Like this is enough time for a lot of AI unicorns at 1 billion in valuation to have started up. Now some of them like Scale AI have been acquired. This is significantly lower than I expected. Now,
dude, we had 200 IPOs this year.
Yeah.
A lot of these companies have gone on to, I think there's 10 of them that are relevant.
Oh, of course.
But that's the market.
Yeah, there's a ton of small names, right? There's almost like an IPO a day. Like whenever you watch, like if you have like a tracker for it, you'll see like 3 companies that IPO at certain days, and I know 0 of them.
Yeah.
Like it's only the big ones that people stop and actually look at, you know?
That's fair.
Yeah, there are quite a few. And the other thing I wanted to bring up was this right here. This is what you're mentioning as far as the incentive structure. One important difference as well is there's no warrants this time. This whole bolded thing is essentially Chamath saying, yeah, last time a lot of people felt scammed, so we're changing and we're being a little bit less egregious when it comes to what we receive. Unless a stock price actually goes up and this becomes something, IPO investors get absolutely nothing. Now, if you look at what Axel or whatever the company was that came in and put it in there, they're doing actually very little for what they're actually getting in return. And Chamath, he's doing more than just putting his name to it. But yeah, this is the way that the incentive structure works: is you're going to get this amount of dilution, founder shares, in 10 years or more likely once it hits these price targets.
Last week, I'm just reading through this. There were 7 IPOs last week. And the only ones that we probably heard of was Bullish.
Yeah.
But there was NXRX, MAGH, BUUU, RYOJ, NTUR,
Yeah, I mean,
MIAX.
Again, I don't think this is a top to the market because I think of it like open door, like pockets of froth that are there. But it is something that is undeniable because it triggers such bad PTSD from 2021, where all of us assumed that these SPACs were just a normal part of the market and they ended up being horrible. I do think he has enough humility to take a company public that's not a pile of shit. And you know, if that's the case, then I think he can redeem himself by bringing a company to public that retail buys into, because there is going to be some retail that buys into this no matter what. And if that company is profitable and like they have a runway of growth and they don't go down 98% because the business model fundamentally does not make sense, like an open door, like a Virgin Galactic, then that wouldn't be the worst thing.
Yeah, and on your point earlier regarding the flack that Robinhood might take from, you know, unsuccessful private equity, you know, the firm goes belly up. I mean, they already have meme coins on their exchange. They have companies also that are publicly traded that are not. They should be out of business, and they probably.
Yeah, I guess most of it is in the marketing. I didn't really think of that, but yeah.
Okay, one super chat. Let me read this, and then we'll get into Sam Altman stuff. Pedro, thank you for the $50 super chat. Thanks for your content. Has made a difference in my investing life. Please divide this evenly among the 3 of you. Would be more, but my oldest daughter is getting married on Labor Day weekend, and checks for costs associated with the event soon flying all over the place.
Thank you, Pedro.
Yeah, thank you, Pedro. I will be fueling PayPal's net income by paying $5 to send Tanner his part of the super chat right here, like I did last time.
Why do you have to pay me? Oh, you don't have to pay money to send people via PayPal.
Apparently, into Canada, there's a stupid fee that I have to pay just to send you your cut. So
just wait till we see each other in person. Just give them that, or
yeah. Roy and I always get Mexican food whenever we see each other. So
Tanner, if I give you US dollars, can you do something with it or no?
Yeah.
Okay. Like, would you accept a US dollar, like a $20?
Oh yeah, yeah. I'd prefer it.
Tanner's like, I want that freedom money. That's freedom money.
American bucks.
That's
But
the
Pedro,
thing, right? In US dollars, you can go anywhere in the world and people will take US dollars. It is the truth.
yes, agreed. Pedro, thank you for the super chat and congrats on your daughter getting married. That's a super, super special occasion. And thank you for being part of the channel. Okay. Palantir, short. I think Tanner, let's hear from you first since you don't own the stock. What do you think of Andrew Left from Citron Research shorting Palantir?
I think the short is a terrible idea. I think a company that's doing what Palantir is doing, a market can stay irrational longer than you can stay solvent. I don't know why he's ever trying to time what's going to happen on the valuation of Palantir. This could last 10 more years and head even higher. Like yeah. However, I love this comparison, and why Roy is excited to get into this is because I actually do think that OpenAI at 500 billion versus Palantir makes OpenAI look so cheap. And I said this Friday before this even came out. I said I would buy OpenAI like this. It would be 10% of my portfolio the day it went public. And I meant it at 300, and I still like 500 is more expensive, but it's still there, right? Like, but 300 is where I was like, oh my God, of course, this is a screaming buy. And now that he's talking about the expectations for the companies, it really does put into perspective that 2026, you're probably going to see around $29 billion of revenue for OpenAI, and you're going to see somewhere around maybe $6 billion for Palantir. I understand the margins are different here, but that's only going to get better for OpenAI over time as, you know, token generation becomes dirt cheap, cost of energy goes down, like everything is in the is on OpenAI's side for future margin generation. And I really think the whole commodity argument is sort of overblown, considering they are the number one provider for like Microsoft would love to own OpenAI. Apple wants to put, like, Elon Musk is getting mad at how much Apple loves OpenAI. Those are the two largest ecosystems in the world, and freaking it's OpenAI every day. Like, it's just amazing how well positioned they are, in my opinion. So I don't really care about Andrew Left's position here, but I did like that comparison. I thought that was really interesting.
Roy?
I'm happy to get ripped to shreds now. I'll put my chair back.
Roy, what do you think of what Tanner said? And would you agree with Andrew's short thesis?
No, the guy doesn't understand Palantir at all, which I guess you were excusable maybe in 2022 or 2023 when you didn't see differentiation. You were just looking at Alex Karp's long talks and discussions. But I mean, if you go into his initial short thesis, the updated one that he came out with, I think it was today. It was today. He doesn't get the company. And I agree with Tanner. Like, it makes no sense. Like, Citron is basically shorting, from what I understand, Palantir for two reasons. One is they don't understand what the company does, and the second is its valuation is quite high. I agree. It's quite high.
Wait, is that what they said? They said we don't understand what they do in the report?
No, roundabout.
He just doesn't agree with what, but I also agree. I think they understand Palantir's business model better than you're giving them credit for. I think that they are also just not telling the truth. I think he's kind of selling his book a little bit.
I mean, like, it is kind of like the spaghetti to the wall type of thing, where he's not just, this is a flawed debate tactic, frankly, and you can comment on that too, Amit, where instead of just taking your like 3 or 4 strongest arguments, you're going through every single argument from very legit, like valuation is quite high and OpenAI is doing a lot of good things, to like just outlandish stuff that almost nobody believes, and probably the person even writing the report doesn't believe. So I think there
was a lot of them in there that sounded like the argument whenever they were talking about Cash App being like, rappers use Cash App, and that's not like, it was like that. Like,
and a lot of
could have done better just leaving that out.
And I think it weakens the argument, and it shows that you don't understand. Like, one of those, they talked about OpenAI, how OpenAI has basically no competition, and Palantir has a ton of competition out there. And I'm like, you actually may have switched those names, because I don't know how you come away with that in 2025. 2023, sure, you can make that argument. That's a failed argument right now. So Regarding, the short thesis, it's deeply flawed because I really think it's just on valuation. I think he's throwing spaghetti at the wall to try to make the stock price go down. That's what short sellers do. That's their job. They're there to make money, and they will do it as sketchily as possible. Not because, some probably enjoy being sketchy, but I don't know. I always have a bad taste in my mouth from short sellers. There's a legitimate place in the market for them, but I mean, there's a reason why Alex Karp hates them too. Palantir is not going to be put out of business by short sellers, but oftentimes they go after legitimate companies that are on the edge of making it and doing something special, like Tesla, and they'll try to kill them before they get off the ground, which is, I think it's reprehensible, frankly. So I hope they lose a lot of money on this. I rarely hope that people lose money on this. I don't mind individuals shorting Palantir or whatever, but this kind of FUD is ridiculous. Now, on the actual piece that Tanner wanted to talk about more so was the OpenAI valuation. It is a commodity, no matter how you slice it. Here is, this is a little post that I did. I thought it was really interesting because it intersected Robinhood, Google, and also this little article as well for Palantir. So on the prediction market on Robinhood, this is back ended by Kalshi. They have a select the best AI at the end of 2025, according to LMSys, the arena scores, and a note as well that it will count as a no if there's a bunch of tied at the top. So this shocked me. I would have thought ChatGPT would be close to Gemini, maybe Grok a step below, and same with Claude. But they're giving no credit to a lot of these. And Llama, fair enough. Quinn is actually really good too, and very little Anthropic. But Gemini, 59 cents, which implies 59% probability. I think that this is probably the play, is to say no, just because, that's really high. But it's interesting because you look at the actual arena score, and they are fractions of a point different, but Claude, Gemini, and GPT-5 are neck and neck. But if you scroll further down the list, I guess we could. You have a lot of up-and-comers like Quinn out there and Kimi. I have no idea what Kimi is, or Kimi, however you say it. There's a ton. There's hundreds and hundreds and hundreds of these. OpenAI is the biggest. It's the best. It's got the spotlight. But this is very much a commodity. And you can do well with commodity if you have size, if you have scale, if you are able to differentiate as well. OpenAI, I think, will, but your underlying commodity itself is going to get pressed on margins because it's a commodity. That's what happens.
It's going to be $1 trillion company or commodity in no time. And
hold on real quick. So let me just say something real quick, then we'll get into this debate. Number one, I think the short is also kind of stupid because his argument is valuation. If it was easy to short Palantir on valuation, everyone would have shorted it because it's freaking expensive. We get it.
Yeah. Why didn't you start your short at 90?
Yeah.
So at 180, he draws the line, which maybe that is the right time to draw the line. But a short, he's calling for a $40 price. I don't know if he's going to get that. And if it really doesn't go below 100, what type of short are we talking about here? At that point, you could have just bought puts. It's not that exciting.
I think he gave it a 40 based on a price to sales, which doesn't really make any sense. But
yeah, because Palantir's price to sales, even at 20, was aggressive. So the idea that you use that doesn't make sense. Also, real quick before we get into the commodity debate, the dude's in court right now. So Andrew Left has been indicted in the Central District of California on security fraud charges. Prosecutors allege he manipulated markets by using his media presence and online publications to push misleading stock recommendations while secretly coordinating with hedge funds and profiting $16 million. Today, he had a pretrial motion. So I'm not trusting the guy who's going to court based on securities fraud with a short on one of the most high-profile companies, because he's probably going to put out media to try to get people to short it while coordinating with hedge funds. I just think the whole thing's a mess. And I actually think if this was the guy to short Palantir as the most high-profile short, I am very happy it's him. Because
so are you suggesting that it includes 17 counts of fraud? Are you thinking it's 18 counts of fraud? You think he's doing this again?
I don't know, but the point is the fact that he's in court right now trying to fight for his innocence on manipulation and coordination with hedge funds and conspiracies. And now at the same time, he's publicly shorting a big name, and he's probably gonna have to put out media to what if the stock just stays stuck at 150 for the next couple months? You need to put out media to get people to be scared. It's gonna be the same type of manipulation. And then the question is he working with other hedge funds in coordination? So I just think it's a mess. And if he was gonna short it, then I'm happy it's him and not someone else, because he's got to be brave enough to actually go on this journey. And I don't think that it's easy to short a name like Palantir given his history as well.
Yeah, I think there's legitimate short sellers that make legitimate arguments. I don't think they do very well. It's a lot easier to be long. There are some that do, I'm sure, but like he's sketchy. So I think his whole argument's flawed. That price to sells that you mentioned, like he's like 17 times. If Palantir fell to $40 a share, I was wrong. That would actually not be a good value. It would be generous. And he said that's like a unicorn valuation among SaaS. And I looked at Snowflake. Do you think Snowflake is a unicorn, that it's trading like a unicorn? It's trading at 17 times price to sell. So it's like your whole argument is so messed up. And I actually just off the top of my head, I looked up like 6 names, and I think 5 of them were 17 times price to sell. So I'm like, this guy is an idiot. He's pulling out. Well, I don't think he's an idiot. He's probably not. But I think that he's pulling out anything that he can legally to, like, even if it's not really technically true, it's not untrue enough to actually get sued. And there may be a point where he becomes desperate, and does something illegal again, because there is like legal manipulation of the market where you put out those type of press releases, and there's some that is very sketchy and illegal. So
I think he's also trying to distract from his lawsuit. Like, ironically, today is the day you put out this $40 short report when you're being sued. I mean,
well, didn't he do it last week? But I mean, like same.
Yeah, but days they released the official report, which, by the way, is behind a paywall. So it's like, it's like they wanted to get people on their website and not focus that the manager of the fund is being sued for $16 million.
Yeah, didn't Andrew Leff come out after the last big short that he did, and he said they weren't going to short anymore because they got obliterated? Like Citron Research got
GameStop, yeah.
Yeah, didn't they say they weren't going to short anymore? They were going to only do long positions?
Well, Palantir is too compelling of a short. And I guess we're going to see if he ends up being right. The other thing is he doesn't have Wall Street on his side, dude. The short float is 2% on a 2.5 billion share company in terms of the shares outstanding. So there's like 50 million shares shorted. There's not a lot of interest in shorting Palantir. Now, maybe he single-handedly can get people to get interested, but if he doesn't, then, where's the upside on the actual short float? Okay, so going back to the commodity of OpenAI stuff. So Roy, your argument is OpenAI is commoditized and Palantir has less competition than them. Tanner, I think you agree with that, but you still think OpenAI is going to $1 trillion. Is that correct?
I don't think the benchmark or where they rank there is what the average, like, I don't think that what people are looking for OpenAI is not humanity's last exam score. I think they're looking for personalized solutions and like real utility, not just how smart the model is. So if you give, for example, probably the number one feature that I use across any AI product is their voice mode. They all suck except for OpenAI's. I mean, I cannot use any of the other ones other than OpenAI's. And for the most part, the image one only now has Grok, and some of these have gotten good, but like even OpenAI dominated in that. And they knew from a consumer's perspective that was much more important than other features. Like that's why the Ghibli style stuff blew up. They knew that that was just going to be a viral moment. So I think that what OpenAI is really good at is dominating in where they know consumers are going to love these products. So what I think a lot of people were worried about ChatGPT 5 was like how it actually marked and its benchmarks versus how personalized, how emotional, how like those things I think are important for their average user. And yeah, I think it's the reason why they continue to take market share and their daily average or daily active users continue to climb. Like they are dominating. And it's not because their model's the smartest, it's because it's the most useful.
Okay, Roy, your response to that?
I mean, like, I guess, Tanner, you're conceding that it is a commodity. You just think that they're positioned well to benefit from the commodity. Is that correct?
Well, I think the same way, like if you look at a browser, for example, there's a lot of browsers, but somehow Google has such an advantage over the others.
Size and scale. Yeah.
Right.
Okay. So it is a commodity then. So I don't have to.
Yeah, to some degree, but there can be personalized differences.
Like, I mean, a commodity doesn't mean that there's no differences at all. It just means that there's enough in common that there's a lot of different options. It doesn't mean you can't profit from that, but there are a ton. Now, on the voice comment that you said, what other LLMs did you try that had the voice mode that you didn't like? Gemini, obviously.
Yeah, Gemini, Grok, and ChatGPT are the ones that I mainly use.
Did you try any other of the voice ones?
Outside of those three,
Yeah.
no.
Okay. Yeah, there's a bunch out there. I've only played with them a little bit, so I've not used them in detail. So I'm just curious, if you had used any of the others and found them not compelling. So,
No, but I don't think that if you look at the average, like if you're not looking outside of Gemini and OpenAI, the rest make up for like altogether single digits of the percentage of the market share. Like,
yeah, that's a starting spot. I don't know that that's necessarily going to stay the place. Part of the reason why
but it
OpenAI
will
is
if they
able to do
dominate
this,
Apple and Microsoft, they will.
part of the reason why OpenAI is able to do this, well, first mover advantage is a significant thing. I don't think Sam Altman is a dummy. Like, he's obviously brought his company along this journey, despite a lot of challenges that were along the way, including losing Ilya initially, and then this most recent exodus, which is too soon to say how that's worked.
Even losing Sam at one point.
And they will, I think, sell quite a bit of other value-added services. But beyond the first mover advantage, the reason why that they are entrenched very well right now is because they have a very low cost. Their model right now, and I know you have an argument on tokenization getting a lot cheaper, and it will get cheaper over time. But I don't, maybe you know this, like, what is their cash burn like? Because my understanding, at least, it's dated, but I think 6 months ago I was reading some things on it, and it looked horrendous. It looked like Rivian, like just after IPO. Just
but Roy, yeah. but no, before we get into the nitty gritty of cash burn, because like we can talk for hours about that. Your claim is that OpenAI is not different really from the other LLMs because they're all burning cash too, right? But your point is,
well, no, they're not all burning cash.
Grok is burning a lot of cash. What are you talking about?
Grok is burning a lot of cash, but Gemini is not burning a lot of cash.
Well, Gemini is okay because that's Google. But
Claude is losing a little bit of cash, but they're close to profitable. I think they're a year away. There's a lot of smaller models that are actually profitable right now.
I think there was an internal memo that got leaked from OpenAI that said they were going to lose 20 billion per year for the next few years.
Okay, but Roy, your point is OpenAI is not that interesting of an investment because essentially you can do whatever you're doing on OpenAI elsewhere. And that's sort of the thesis of the commoditized argument.
Yeah. But that's like saying you can do anything on a Motorola that you can do on an Apple iPhone.
So I would take Tanner's side on this. I think the first mover advantage OpenAI has is monumental. You ask any regular person what they think of when it comes to AI, they say ChatGPT. They have 700 million weekly. Grok barely has, or Twitter barely has 600 million monthly, which means Grok is nowhere near 700 million weekly. Like, I think OpenAI has won. I think they've won when it comes to LLMs, especially on the consumer model. They will figure out the business model in the next 5 years. But
I really do think that Google can win because I don't think that they have. The problem that OpenAI doesn't, like, they don't have any ecosystem, but that's why all of the ecosystems are partnering with them, is because they don't see them as a threat. So, like, Apple is not going to go to Gemini because it's just going to power Google, and that's a dangerous thing. That's like why banks don't partner with Galileo, because maybe they don't want to make SoFi even a harder competitor. But OpenAI is just doing this sole thing, so every company can work with them because they're just doing their own thing.
and also, let's just not even be complicated. Like, Roy, I'm interested in your take on this. Like, any regular person that's not in the tech bubble in finance, they think of ChatGPT when they think like
it's a verb.
It's a verb. They don't know what a Grok is. They've never heard of Gemini, Anthropic. Like, you got to be a coder to even know about Claude and all this stuff. I don't think that market share is going anywhere but up. They won. They got the first mover advantage.
I don't agree with that. But yeah,
they would have to be so horrendous in GPT 6, 7, and 8 for Grok or Gemini to meaningfully get the rest of the world to leave OpenAI, which is possible, but what are the odds of that realistically happening?
Yeah, I think that if there's a bubble in AI, it's in private market AI companies, and this is just case in point. I'm not saying that Palantir isn't egregiously expensive. I'm not saying that OpenAI won't go to $1 trillion. It probably will. They need to raise money. They're going to continue to do this. There's a lot of demand for what they're offering.
OpenAI is going to do twice the revenue or 3 times the revenue of Palantir this year.
But they burn a lot of money.
Yeah, but Roy, Palantir makes a very small amount of profit, even if OpenAI makes none, right?
Oh, but that's scaling rapidly. The thing is, we cannot take for granted, especially when you have a commodity, And you have a leader that hasn't done this before, because it is a hard problem. We shouldn't understate that for even for a SaaS company to go from unprofitable and burning a ton of cash to profitable. I'm not saying that they're not going to do it. I'm just saying it's a mistake to take it for granted that they're going to be instantly profitable, that tokenization prices will collapse. I'm skeptical.
Yeah, but look at what Facebook was just dumping through cat. Google, like all these ones that had an unbelievable market share to take, they were just cash pits, or like fire pits for cash to take market share. So would you change the strategy of OpenAI in any way? Because I think they're going about it perfectly.
So you think advertising will save OpenAI as far as profitability?
Not advertising.
Well, hold on. Speaking of business models, let's take a look at this clip that just came out from a podcast from Dylan Patel, big semiconductor guy, speaking exactly on this topic on OpenAI.
Big fan of Dylan.
What did you say?
I said big fan of Dylan.
Okay, yeah, this guy knows semiconductors very well.
I think the router points to the future of OpenAI from a business, right? In any other application, consumer app, the free user still pays via ads. But this is not compatible with AI, right? Like, it's a helpful assistant. You can't just make the user's result worse by injecting ads. Banner ads don't really work in AI either. So it's like, how do you now monetize them? And I think they're getting, with the router, they're getting really close to figuring out how to monetize that user, right? Oh, if the user asks a low value query like, hey, why is the sky blue? Just route them to Mini, right? Like, the model can answer it perfectly fine. And that is a chunk of queries, right? But if they ask like, what's the best DUI lawyer near me, right? All of a sudden, this is like, you're in jail, you have one shot, you're like, screw it, let me ask ChatGPT what the best DUI lawyer is. And now all of a sudden, the model's not capable of it today, but soon enough, it'll be able to, contact all the lawyers in the area and, figure out what their results are and maybe search their like court filings and whatever, right? And book the best lawyer for you. This is a much better way of like monetizing the free user. It's like, it's like Etsy, 10% of their traffic now comes from chat, and OpenAI makes nothing off of that, but they really, really will soon, right? And partially that's because Amazon blocks chat, but like, there's a way to make money from shopping decisions, whether it's booking flights or looking for.
So essentially, agents will be the way OpenAI takes a fee off that. This is just one of many business models I think they have. I think they figure out the profitability stuff in the next 5 years. I don't think that's the concern on OpenAI.
And if the runway is long enough, it might not even be 5 years. Like, because if you have companies that are cutting you $40 billion checks, SoftBank is essentially telling OpenAI, hey, you don't need to worry about monetization just yet. Continue to take care of market share. We got you. If they need to bootstrap it, they could, but that's not the way that you find the winning formula right here. It's full on growth mode. And you're seeing it from one of the smartest names in venture capital that knows how to scale. But Sam Altman, like, he's from this space. Like, he completely gets it. So I think it is completely take market share mode, and he's winning. I mean, you're in the ears of Tim Cook. You've won the game. Well, however, I do want to say really quickly that I don't think that they've won entirely. The virality in AI right now is insane. And you can put out one little product like Ghibli photos and stuff like this and just see 3x the volume. And Gemini did that in their last meet about Gemini, or Google did that about Gemini, where they showed off, different things, VO3, all of these different products. And they saw like a massive spike up in their user growth. So there can definitely be breakthroughs like what we saw about DeepSeek and all of these things. We're going to see new players come in very fast, but there's moments for that breakthrough in OpenAI as well. And I honestly think this will be $1 trillion company. It'll be the largest, like a top 10 business in no time.
Roy, you think GPT is just not it?
If it was, well, I mean, you're right on cash runway. Plenty of time. They're in scaling mode. I'm not like GPT is terrible or not going to make it or anything like that. 500 billion is pretty expensive, and they hit 1 trillion in valuation. I'd have to look at publicly traded companies, but I believe that might be the lowest amount of revenue of any publicly traded company.
Probably
$1 trillion valuation, like ever.
Palantir will pull that off first, so that's okay.
That's
I
Palantir.
actually don't think so. I would venture to bet OpenAI hits it before Palantir.
It's very possible they can.
Probably it's private
With
market.
almost 100% certainty. Like,
Yeah, it's private market. It is. I mean, there's not many of these that you can invest in. A lot of these models are not just something where you can buy stake even in the private markets. Anthropic certainly is the other better known one, and I think they're killing it. But
So let me ask in the chat, if OpenAI went public today, who's buying?
by 2029, I think they're expecting 125 billion in revenue. Like you talk about, look at the amount that the top 10 companies are making. We're acting like Nvidia wasn't there and everyone was like, oh my God, this is the most expensive company. Now we all look at it as super cheap because the stock hasn't risen as fast as their revenue. So their multiples have gone down. But there was a point in 2023, 2024, where Nvidia's stock was skyrocketing and it was really on their potential growth rates going forward. So they were at, tens of billions, way lower than a Google or Microsoft. Steve was making article about how expensive this stock was. Now it's his favorite stock in his entire portfolio. So OpenAI is going to follow that exact same trajectory, and they're growing much faster. Like they just tripled their revenue in 2025, and now they're going to do another 100+% revenue growth the next year. And this is insane levels of growth.
What happens when they have 1 billion weekly users?
No, I get it. And really, I think that there's going to come a moment in AI where there's a step point where human capital, the amount that people are spending for labor, becomes silicon capital, GPU capital, and that the amount that companies spend on their workforce will be spent to ChatGPT and NVIDIA and these types of players rather than going to open markets to find labor, right? This is where a large percentage of companies will head. And how do you value that today based on average revenue per user whenever it's going to be valued at $20,000 a month, $10,000 a month for, a product that ChatGPT is going to sell you?
Agreed. And I don't believe that their hardware is going to be that exciting, but let's say they do come out with an iPhone competitor and it works.
I don't care about that.
I don't care about that either, but I mean, that's another tailwind that theoretically could happen. Now, one thing we have to discuss that we haven't, and I want to read this whole thing and I want to get everyone's reaction to this because this kind of contradicts what we're saying about OpenAI being kind of cheap here. Sam Altman talked to some reporters on Friday and some quotes. He said, when bubbles happen, smart people get overexcited about a kernel of truth. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes. Altman appeared to compare this dynamic to the infamous .com bubble. His comments add to the growing concern among experts and analysts that investment in AI is moving a bit too fast. You have other people in the investment world that have raised similar warnings. Is Sam Altman saying that his own company is overvalued?
No. I think that there's a bunch of companies that are getting the Tesla premium where they go, oh, Tesla did it, so Lucid's going to do it, and then they get a massive premium off of some other company's success. And so there's a bunch of tiny companies that are getting tens of billions of dollars worth of valuation for not even remotely the same level of execution.
And I agree. I don't know that he's saying necessarily that he thinks that OpenAI is at that point, but there's a lot of other companies too that are just throwing around AI still, like it's 2023, and you can just say AI 30 times and your stock goes up. Case in point, recently with some investors, Open Door. We talked about that one before, but oh, why is this going to be a great thing? Oh, because AI and AI this and AI that, and they're doing this with AI and that with AI. Say AI, 100 times in 10 minutes, and then the stock goes up. And it worked today. So
I was listening to Amit go off today on OpenAI. Holy.
Open Door, not OpenAI.
Oh, sorry. Yeah, Open Door.
We can talk about that too if you want. But I agree with you, Tanner. I think Sam Altman's basically saying everything's overvalued except OpenAI. I think he's saying all these LLM companies, all these AI startups that attach AI to their name, that if investors are paying ridiculous multiples for that when there's nothing real there, that's the exuberance, just like the .com bubble. But the OpenAIs of the world are obviously not that exuberance. Even if they're getting a crazy multiple, they will grow into. They at least have the potential to grow into it. Whereas some of these, I don't want to name names, but there are some names that are out there that attach AI and They're not really growing. So
So part of Tanner's argument, or at least I thought that you were going this direction when you basically said that it was just a good comp in our private discussion. I thought you were basically part of it. I thought you were talking about the valuation of Palantir, and I'm glad you weren't, saying that based on price to sales, which is a silly argument. But just that I see that you're just saying it makes it seem that this valuation 500 billion, which initially surprised you, now you're like, hey, I'd be okay with that. So Amit, your response is a little different than I expected. If this is publicly traded, valued at 500 billion, exactly as it is right now, would you sell some Palantir and buy OpenAI?
No, I wouldn't sell Palantir to do it, but I would try to find new capital and like buy OpenAI. Because look, to me, it's very simple. It's very hard to find companies that are growing at the speed that they're growing at that have the user first mover advantage and market share that they have. Now, Palantir, to me, the thesis is just so incredible because of how they're growing in the enterprise. And after that quarter, if they can keep that up for the next couple of years, this is going to be a very, very exciting story. But OpenAI is going for 8 billion people using their product every day. Like, we haven't seen a product ever even have the potential to get to something like that since Google. And Google's entire business model now is being flipped upside its head. And
or what I see Meta at, or I gave it away. What I see OpenAI as a little bit of a Meta.
Correct.
And
Sam Altman talked about this. Dude, I was using ChatGPT over the weekend. The experience you get talking to an AI and learning, it makes you feel good versus scrolling through Facebook and seeing just like nonsense and clicking on ads. And that is a threat for the competition of time, because if Meta doesn't have people scrolling through their apps, they can't sell ads. They lose. And so I think if AI becomes competitive, I think that's why Zucks is going so deep on superintelligence to build like these AI meta bots. I don't know who's going to interact with them realistically. I mean, we'll get some percentage of users, but if OpenAI wins on the user experience, I think they win the game. And I think that's worth trillions.
Yeah, maybe. I think, and this is weird because we talked about Google previously before. I think Google is their big problem because Google does not have to make Gemini profitable. They're also not burning a lot of money. They also control their own tech stack. They can afford to make Gemini is, in my estimation, almost as good, if not as good, as GPT-5. I use it a little bit less than OpenAI's. That's my number one still, but it's very good. And they can make it cost nothing. And you're already using Google, easy to sign in. If they choose to go that route, I think that they can really dent OpenAI's lead, and they won't be the only ones doing that.
And I want to add, because Zoom is a great product, and I'd say that Zoom is better than Teams. But Teams still won, or sorry, I meant more Teams versus Slack mainly, but let's include Zoom in there anyway. But Teams won overall regardless because of the bundling effect. And Google has so many bundling advantages. Like, you could see now they're selling packages where they're going, oh, get Gemini Pro, get all of these things. We'll give you 2 terabytes of, drive space and all of these extra benefits that Google has. It is an amazing advantage. Elon Musk's tweet, if maybe Amit, I'm sure you've covered this, about him talking about how Google is most likely to win the AI race early on. Google does have the full tech stack. That's why I said it might be a little too early to say that OpenAI has won, because they don't have the ecosystem. But they seemingly are partnering with the biggest names that do. The biggest names that have slacked a little bit.
Well, yeah, I was going to say, like, their biggest thing going for them, not really their biggest. I need to give them more credit. Like, it is a well-known company. Sam might be a unicorn CEO. We'll have to see. Like, I think that he nails it.
I think that's already proven, dude.
I don't know about that, but
I agree,
$500 billion company.
But bro, he snaked the hell out of Elon. And the guy got fired because they couldn't trust him. Co-founders left the company. I mean, there are definitely some ethical concerns about him as a CEO. You can't deny that.
I don't know. Hey, you know what? Steve Jobs got kicked out of his business too. Okay, so if we were putting up there, like,
no, but Steve Jobs got kicked out because he was a dick, and he stayed a dick for the rest of his life. Sam Altman, literally the guy who came up with the name for OpenAI and funded it with 40 million of seed capital, somehow doesn't own equity in it. Like, you don't feel a little bit of concern about trusting that guy?
We need more time, is what I'm saying, to make that determination. I think it's prudent to say they've created something special. We'll see how special he is as he executes over the next few years. And he may well be a unicorn level of CEO. I forgot where I was going with that, though.
Yeah, I mean, look, I think OpenAI is still going to do very well, but there has to be some reservations around Sam, dude. Like, why did the co-founders leave? Like, can someone like, why did Mira Murati leave? Like, why did Ilya leave? Are you have a chance to achieve AGI, become a multi-trillion, and you just leave? I find that hard to believe that, oh, I'm just going to go do my own thing. That's a like, I don't know if we've come to the end of that saga on why that happened.
Yeah, that's another reason, and that's a great point. I didn't even think about that. Why it would be so if it was IPOing tomorrow, I would be buying shares, absolutely.
Yeah.
And I'd be looking to exit, sometime over the next year probably. But I don't. Him as a CEO, I have some reservations. I think he might be incredible, but he also might be less incredible than a lot of people portray him at this moment. And I just versus like Alex Karp. I don't know many people that actually have reservations with him unless it's just very strange. Like, I don't like his haircut, or why can't he wear a tie more, or why is he so good at spinning laptops on his fingers? Just
yeah. I think the way for all of us to win on this though is NVIDIA, right? Like at the end of the day,
yes, sir.
Easy. Yeah, probably Google too. Honestly, guys, I'm coming around.
Oh, do we want to quit? You're coming around? What? That's breaking news. When did
I mean, like, I'm not buying, but
bro, I saw you say bad things like 2 days ago.
I still think that I'm right on not all their model, but like half their revenue is going to have some issues. It's a deep enough moat. I think it gives them enough time. Like, the longer and the more I look at it, I think SEO is a dying industry. There will still be some that make the iteration and make the change, but yeah, what they're building with everything else, like literally everything else except for search, is just either really good or amazing. So
wait, so let's talk about this real quick. I'm not going to read the whole thing, but Chris Camillo, a friend of the channel, he came out with a thesis that Google is inflating their search queries using AI or indexing AI queries on bots like ChatGPT or Grok, and that's coming into Google's actual search results. That's why their search queries are up year over year. He disclosed he has a small short position, and he's seeking truth and transparency in Google's policies and disclosures. And the reason he has a small short position is because he's thinking advertisers are going to wake up, kind of similar to Roy's argument, and recognize that a lot of this stuff is fake, and that will reflect in the numbers. Roy, do you agree with that, or are you coming around to the point where that might not be as big of a concern?
I don't think that there's something deliberate happening there by Google. In as far as like characterizing AI traffic as human traffic, there may be some things slipping through the cracks. That wouldn't be shocking. That wouldn't be untoward. That wouldn't be irresponsible either. I think the bigger issue is what Chris Camillo is pointing at. There is, he's asking for transparency and details. Guess what Google will give him?
Nothing.
And it's their right to, technically, but there's a whole bevy of shareholders that I think deserve better, frankly. There's a whole bunch of SEO guys that deserve better. There's a whole bunch of businesses that are advertising that are seeing amazing, great results. That's rare. It does happen. And I think that they deserve better. And Google will not give them that. I think because of what I underappreciated probably when we talked about this a month and a half, 2 months ago, is just how deep that moat is, because I mean, they've dominated this model the internet was built upon, favors, and was built around Google. And so people are going to switch off of that as time goes on. But even though many are unhappy, I would say, probably more than half the SEO people, a lot of the advertising people are unhappy. Businesses, I'm not sure. I don't have a great read on that. But I imagine that a lot of them are not super thrilled and have concerns. They're still going to wait a long time to switch, just because, like, for the SEO people, some of these people maybe graduated, like 15 years ago. All they know is SEO specific to Google, a little bit Bing and stuff. But I mean, Comet browser's not out yet. Like, it's going to take a while before there's anything else that's out there that's compelling as far as search. So what I'm saying is, I don't know that there actually are companies that are switching some of their advertising spend away from Google, but it's going to be a trickle at first. Same with SEO people, although maybe they just die or do something different. And so that's going to take a lot longer than I think I initially appreciated. So that's where I'm coming from. But yeah, Camillo, he's going to get absolutely nothing. I think there's going to be increasing amounts of smoke, and I'm hoping that translates to the share price just tanking to a rational level. I don't think that we're there yet with Google. And at that point, I would easily become a shareholder and an investor because, again, half of their business is phenomenal. And the other half of their business, it's going to deteriorate over time, but it's not going to be overnight or all at once.
Tanner, any quick thoughts on the short thesis?
No, I'm gonna focus on the fundamentals. Mainly, I mean, you can talk about the queries, but at the end of the day, if you think that they're lying on their gap numbers, then it's still a growing business. And yeah, I don't know. I think that once again, this is going to be one of those types of Palantir at 10 or Google at 200, where you can say, hey, you know what? I've got this gut feeling. You have that gut feeling. We're going to have to wait and see with the numbers because I don't have any concrete evidence to say that Google is going to do well, but I'm not seeing people switch away. And I believe in what they're making. And I think that they have a strong tech stack and an unbelievable ecosystem. So I'm just betting on that. And we'll see what happens on Q3 and Q4 and 2026 and beyond.
Yeah, I agree. Until it shows up in their numbers, which that's why, Chris Camillo did say he thinks long-term Google's fine, but short-term he thinks this could be a hiccup, which is why he has this like small short position. But if it doesn't show up in the numbers in a meaningful way, I don't know if that actually leads to Wall Street getting upset. And if that's the case, then Google probably continues to do well. All right, that is it, folks. Thank you all for being here. Next week will be live. NVIDIA earnings is also next week on Wednesday. So that'll be something we cover. Powell speaks on Friday. So hopefully he says something nice and we can price in that rate cut. And that is pretty much it. All three of us will be at the Hood Summit in Vegas. So that will be very fun. We'll be covering that live. And yeah, we got a lot of stuff to look forward to when it comes to Robinhood.
It's going to be a blast. Okay, real quick. Can we talk about this live? Are you going to do IRL content?
I'm probably not going to be streaming in real life. You need a setup to do that. You can't just put it on your phone. You need there's actually gear you can buy to like stream when you're like walking around, and I don't have that gear.
I've got a DJI Osmo Pocket, which is not for streaming mainly, but for
recording,
but makes it extremely easy.
We should make a vlog, bro, like a legit vlog.
Just for the event?
Yeah, just like a vlog of all three of us in Vegas. I think that'd be fun. Yeah, we should. We should
be a good time.
Yeah. But yeah, we'll be in Vegas. We'll cover the summit and it is for active traders. And then you got banking in the fall. So 2 big things for Robinhood that we'll be covering.
It's for active traders, but I'm flying out to just twiddle my thumbs and
yeah, none of us are active traders. Yeah. None of us are like trading 20,000 shares of a stock up and down, but like
I'm just hoping.
I still think it's their best event. Like active traders are by far the customers that make them the most money. So the things that they have to say at this event mean more than most of their events.
100%.
Right. So it's so important for me to be there. I want to see what like it's becoming a larger percentage of my portfolio. I got to take this seriously. So I can't wait.
I hope that Vlad yet again asks who all are Robinhood users and that Tanner is the only hand that doesn't go up. Because I don't know. That just gives me a lot of joy. So
what a stupid question. So you don't have to ask that, bro. We're at the Robinhood Summit.
He should.
Like, I have a badge around my neck. Just like, let me be.
Actually, even better, I'm hoping that Vlad asks, is anyone not a Robinhood user here? And that you just have one hand without a collar on your shirt.
Yeah. He'd probably just see me and laugh.
Of course, that might be the Canada announcement. Like, okay, well, we got you, Tanner. We're coming to Canada in 2 months. Like, oh.
Yeah. Wonderfy. Yeah. Let's not forget.
Yeah. And like this, we didn't talk about it earlier, and I don't want to go too much longer. I know we need to close, but this was, I think, their best event last year was the Robinhood Summit. Even though I'm not an active trader, like showing off Legend and all the different things that were coming out, including futures. Very, very good. Very interesting. It's where they can make a lot of their revenue too. We're going to see, I think, because it's entered the mainframe, just a lot of very cool technology geared for active traders, certainly. But there's also, I think, going to be a lot of AI type of products, Cortex as well, but a lot of iterations as far as what Cortex can do. I don't think it's going to go fully like the route in the direction that the founder of Pluto that Robinhood acquired will go. But yeah, I'm excited. And I don't know, like every single time we go in with high expectations for a Robinhood event, and they have some sort of thing that we never, maybe we saw coming eventually, possibly one day, but it's great. So it's going to be a lot of fun.
All right. I love it. We'll be covering it when we head to Vegas in a couple weeks. Thank you, everybody. Appreciate it. Have a good night. See you tomorrow in the
Bye,
Market
guys.
Open, and we'll be back next Monday. Bye, everyone.